Dear student, it's our first lecture, and in this lecture we will introduce the syllabus related to AS and A level, and then we will start accordingly. So we have 4 papers in this level. The first 2 papers relate to AS level and A level. Here is syllabus I want to share with you. This is syllabus content. Look at this. If you are AS level student, you have to give financial accounting paper and cost and management accounting paper. But if you continue with A level, then you have to study financial accounting, cost and management accounting, paper 3 and paper 4. You have to appear in 4 papers if you want to pursue A level. But if you are AS level student, you have to appear in only 2 papers, that is 1.1 to 1.6 and 2.1 to 2.6. Okay. These are the 4 papers which we are going to appear. Paper 1 is same as AS level and A level. Paper 1 including the completion time is 1 hour to solve the entire paper, and it consists of 30 marks, and it's a MCQs paper. And paper 2 relate to AS level also. The solving time of paper is 1 hour and 45 minutes, and here is 90 marks. For AS level, 72% of AS level syllabus it's included in paper 2, and in paper 2 for A level student it's included only 36%, because the remaining percentage will divide for A level student in paper 3 and in paper 4. But AS level student, they will appear only 2 papers, the paper 1 and paper 2. Got it? Montazi, are you AS level student or A level student?
No sir, I'm AS level.
Okay. You can see the route. AS level only. AS level only. Candidates take all AS component in the same exam series. That is the paper 1 and paper 2 only in AS level. Okay. Because you both are AS level student, so we will focus on these 2 papers, the paper 1 and paper 2. Let's talk about the syllabus related to paper 1. In paper 1, we will learn what's the type of business entity, the accounting system, accounting for non-current asset, reconciliation, verification, preparation of financial statements, analysis and communication of accounting information. It's related to paper 1. And in paper 2, we will discuss the 2 topics. The number 1 is cost and cost behavior, and the second one is traditional costing method. Okay. Let's start. Types of business and business entity. Types of business entity which we are going to study in AS level. That is, there are 3 types of business entity that we will study in this subject. Number 1 is sole trader. Who is the sole trader? Can anyone tell? Who is the sole trader?
Someone who owns the business by himself, by themselves.
Sole trader. If a one person is a single person, handle the entire business. One person, only one person run the business. That is called sole trader or a sole proprietor. And what's the partnership business is? Partnership business means if 2 or more person, relative maximum up to 20%, if 2 or 20% combine running a business, that business is considered to be a partnership business. In partnership business, there are more than one person running the business, manage the business. Okay. And what's the limited company? If we want to increase the number of person in a business, want to increase the number of shareholder in a business, then we will convert our partnership into company. In company, there is a more than 20%, more than more than 20%. more than 20% manage the business. Or not, the word manage is not suitable here, because some shareholder just enter for the sake of dividend, for the sake of profit, not for the running a business. More than 20% involved, we can say that involved in the business, although business is run by some expert person, that will be a higher management. So there are three different type of business. Number one is sole trader. Sole trader mean a single person handle the business, and the second one is partnership. 2 or 20% manage the business, and the last one is limited company. If more than 20% involved in the business, got it? Later we will talk about in detail what is sole trader accounting, what is partnership accounting, and what is the limited company accounting. The second point is the advantage and disadvantage of these type of business entity. We will talk about the advantage and disadvantage of business entity. Is a theory question, and again in MCQs examiner can ask what's the advantage of sole trader, what's the advantage of partnership, what's the advantage of limited company, and disadvantage also. Sources of finance and method of funding for this type of business entities included. How this entity finance themselves. There are a lot of ways where these business can finance themselves. Number one is loan. Loan can be secured or unsecured. We will talk about later in this chapter. And the second one is bank overdraft. Bank overdraft means we can use the bank facility. Bank overdraft is a loan facility. And the third one is payment by installment. We can borrow money from our friends, our relative, or any other business, and we can repay the loan amount into the installment. Next one is rental leasing as an alternative to purchase. If we don't have enough money to purchase a machine, we can hire a machine on rental basis, on a leasing basis. Leasing means a rent based agreement where we can hire asset on rent basis. Second largest, trade credit. Trade credit means we can purchase things from our supplier on credit because we have short of finance, and later on in future we will pay back money to the supplier. And the last one is sources of finance for limited company. We will talk about 1.5.4. Here is the some short terminologies that use in types of business entities. The second one is accounting system, but
No, sir.
which book?
Yes.
Which book, Montazir, you are following?
You, sir.
This one is paper 1, 1.12, 1.6.2. This relate to paper 1.
Can you check the group? I already sent it to you.
Okay. Now start types of business entity 1.1. And remember one thing, if there is a huge difference between two guys, either a second edition one or third edition one, then we can separate class for you both of you, okay? Because maybe in future you are going to be in different direction, because there is a lot of changes in third edition.
Sir, in my book, it's showing me that I can go to digital access of it.
Okay.
I can get a digital access. Do you want the digital access of it? I can get it now.
But how can I access? Earlier we talked about this. When a single person is handle the entire business, that is called a sole trader. A sole trader may be a trader, a manufacturer, or a service provider. It doesn't matter. If a single person own the entire business, is called a sole trader. What's the advantage and disadvantage of sole trader? Examiner ask a question in this area. What's the advantage? The sole trader has complete control over the business. Setting up as a sole trader is usually straightforward. There is no need of any advisory from other. It's your own decision either to start a business or not. The financial result of business do not need to be shared publicly. Sole trader investment, sole trader decisions, sole trader income and revenue is going to be private. They don't need to share the private information with public. So it's a benefit of sole trader. The profit of the business belong less any taxes to the sole trader and not shared with any someone. The entire profit will belongs to the sole trader itself himself. What's the disadvantage? The sole trader has unlimited liability. Here is the disadvantage of sole trader for the debt of the business. For example, if sole trader borrows some money from another person and his business is going to be default, his business itself and the sole trader himself liable to clear all the debts. The business, if business asset has gone and business has nothing to repay back the loan, then the sole trader, a person himself, is liable to repay back the loan. So here's a heavy disadvantage of sole trader. Second one is, being a sole trader may involve long hours of work, as a sole trader has no one with whom to share the burden of work. For example, if a person has a general store, he himself run a store. One day he is sick and is unable to open a shop. Then that day his shop is closed for the whole day. So it's a disadvantage. No one can open the shop on behalf of this person because a sole trader is lonely, singly manage the entire business. The third one disadvantage, illness or other reason for absence may affect the running of the business. We talked about earlier. It can be difficult to raise finance when he need it. Sole trader is not to increase his finance by himself. If he want to increase his finances, if he want to get finance, the only option is go to the bank and obtain loan from the bank, or he can obtain loan from friends, but he can't issue his share. Sole trader doesn't have any option to issue share. This is the disadvantage of sole trader. What the partnership is? If two or more persons are managing the business is considered to be a partnership business. This is a business owned and controlled by two or more partners. There is no upper limit on the number of partners allowed. Here are specifically considered the entity known as general partnership. A limited liability partnership is another type of partnership, but this will not be studied for this course. In our course, the liability of partnership is not limited. Here is the unlimited liability. The liability of partnership is unlimited. Remember one thing, the liability of sole trader is limited or unlimited? Unlimited. And the liability of partnership is also unlimited. But here is another type of partnership where the liability is limited, but it's not in the domain of our course. Liability of partnership is unlimited. Okay. How can partnership business is going through? Partnership actually a written agreement where there are number of partners mutually consent with each other and set the business detail, business goal, business objective, sharing the profit and loss ratio, the location of the business, the name of the business, all the agreement about the partnership business is written through a partnership agreement that is called partnership deed. In partnership deed, every documented evidence related to partnership is going to be right in the partnership agreement, where we can write how many number of partners should be in this engagement, in which location our business is suitable for the business, where our head office will be located. Such type of activity will be written in partnership agreement. This agreement covers issues such as the duty of individual partner, the amount of capital to be subscribed by each of the partner, how many capital or finance contributed by the partner, the way the profit are to be shared, either a 50%, either a based on capital invested, either are based on services provided. It will be decided by mutually agreement how profit are to be shared between the partnership, between the partners. The financial arrangement, if there are any change to the structure of the partnership. What's the financial arrangement mean? If new partner is added, then what will be the financial arrangement? If one partner withdraw from the partnership, then what financial arrangement should be? All written in the partnership agreement. If there is no government in the UK, the Partnership Act of 1890 lays down the following rule that must apply. If there is no agreement, for instance, 5 or more person are going to make a partnership, but they are not making any partnership agreement. If partners are making partnership agreement, they have to register this agreement to the exchange. The exchange will consider the documented evidence as the evidence that these partners are going to do a business in this territory. And by using these, for example, ABC firm, it means no one can use the ABC firm if partner register their name to the exchange. Exchange means where companies are going to be registered. If there is no agreement, if partners doing business without any agreement, then by default following rules are going to be applied to the partnership business. No partner should be entitled to interest on capital. It means no partner can withdraw interest from the capital. No partner is entitled to a salary. Means there is no, if a person engaging in the business activity, for example, there are 3 partners, Mr. A, Mr. B and Mr. C. Mr. A is also providing services, Mr. B is also providing services, and C is also providing services, and they consider themselves to be an employee of a company. In the absence of agreement, the law said you can't withdraw salary from the business. But if they write in the partnership agreement, when a partner is providing services to business, he can withdraw salary from the business. Got it? Any problem? In the absence of agreement, no one can withdraw salary from the partnership. But if we want to withdraw salary from the partnership business, we have to write in our partnership agreement. Then we can draw salary from the partnership business. No partner is to be charged interest on drawings. What's the drawings? Asset withdraw by the partner from the business. That is the drawings. No partner is to be charged interest on drawings. If a person, for instance, if a Mr. A take furniture or cash from business, then B or C is not entitled to charge interest against Mr. A. Residual profit or losses are to be shared equally. If they are not decided profit and loss ratio, then equally profit and loss are to be distributed amongst the partners. Any loan made to the partnership by a partner will carry interest at the rate of 5% per annum. Any loan made to partnership by a partner. If a partner obtain loan from partnership business, then business by default charge 5% per annum interest to that particular partner who obtained loan from partnership business. But if partner agree, then one member, one person, one partner can obtain from our partnership business, then no interest will be charged, then it's okay for the partnership. In partnership agreement, you can write any journal agreement in your favor, in your partnership favor. But if you not write any such thing, then according to UK Partnership Act 1890, you have to follow this rule. Okay. Now here is some advantage and disadvantage of partnership business. Number one, what's the advantage of partnership business? Partnership have access to more capital than sole trader from the increased contribution from a greater number of co-owner. In sole trader, we have only one member, and one member contributed single capital in his business. But in partnership, if we want to increase more capital, what's the solution is? We have to hire, we have to make entry possible for another person. For example, if there are two partners and partnership business needs some more capital, it's very simple to hire partner C, and you want to increase more capital, you can hire another partner, that is Mr. B. So see, partnership business, it's very easy to increase capital for the business. So it's a advantage of the partnership business. Second one is, partner can specialize in different aspects of business management, allowing business operation to match the expertise of each partner. For example, if we have two partners, partner A expert in finance, partner B, for instance, expert in IT, but we need more person because we have insufficient skill to run the entire business. For instance, we need some HR person, we need some skilled person. So if we have lack of expertise, then we can hire the another partner to whom the specialized skill he has. So it's an advantage of person, it's an advantage of partnership. We can hire expert person according to the need of our business. Illness and holiday can be covered by other partner if needed. If some partner is ill and absent and can't join the business, the other person can fill the space, can manage the business in the absence of ill partner. So it's an advantage of the partnership business. So there are three advantages actually. Increase capital, we can increase more capital. We can expert the skilled person to match the business need. And the third one is, if one person is not come to the business, the other person fill up the space. And what's the disadvantage? Partnerships still have unlimited liability. I told you the liability of partnership is unlimited. What does unlimited mean? If business assets are sufficient to pay back the loan, the partner themselves liable to pay back the loan. Second one, disagreement may be more frequent if they do not agree on how the business should be run. Here is a lot of possibility that Mr. A, Mr. B and Mr. C's ideas are not synchronized. Maybe Mr. A and Mr. B are agree, but Mr. C doesn't agree with A and B. There is a lot of chances that all these ideas, all these partners' ideas are not same. Then there will be a conflict between the ideas. So it's a problematic situation for the partnership business because many persons are not going to rely on the single statement. Profit will be shared between partners, which may seem unfair if a partner believes they deserve a higher proportion of profit. So there is a disadvantage of the partnership business. For instance, Mr. A contributed high capital. Mr. A contributed high capital and Mr. B contributed low capital as per A. But Mr. B providing services more than Mr. A, and finally they equally contributed profit. In this scenario, Mr. A will realize then it's unfair with Mr. A. He contributed a lot of capital and Mr. B also enjoy the same level of profit. And the last one is compared with limited company, a partnership may still find it difficult to borrow money. In partnership business, partner can't borrow money from public. The only way is to borrow money from bank. Partnership business can obtain loan from bank only. Got it? And the last one is both sole trader and partnership are relatively simple form of business entity in terms of their legal structure. The law doesn't make any distinction between the business and the owner of that business. Here is the catch in this sentence. According to the law, please consider this statement. According to the law, there is no distinction between business and owner of that business. It's mean in the eye of law, the business and owner is the same person. According to this statement, business plus owner is equal to same person. Same person. With respect to business and owner is equal to same person with respect to sole trader and in partnership business. Got it? Any question at this stage?
No, sir.
Okay. Here is the limited liability. What does limited liability mean? The word indicates the entire story. Limited company mean liability is limited. Limited company mean liability is limited. But in sole trader or partnership, liability is limited or unlimited? In partnership or sole trader, liability is limited or unlimited?
Unlimited.
Unlimited. But in company, there is a limited liability. Okay? Okay, ji. What is the limited company? Limited company mean 20 or more person, 20 or more person actively involved in the business. Actively involved in the business for doing some task. Either they are going to manage a garment business, they are going to manage a sport business. Limited company may be a two type. Public limited company, private limited company. Private limited company and the second one is public limited company. The detail you will learn in the business subject. Public limited company. Can you tell me the difference between private limited and public limited company? Have you studied business studies or not? If you studied business studies, then you can tell. Otherwise, I will tell you.
Private limited company is a company that you sell shares to your relatives or people that you know. Public limited company is a company that you sell shares outside externally.
Okay, well done. Private limited company means share can't sell its share to the general public. Private limited company arrange finance internally, but can't sell his share to the public. Cannot sell its share to public. Or public limited company whose shares are listed on exchange and can offer its shares to general public. So public limited, we will talk about the public limited company. So public limited company has a vast opportunity to increase its capital by offering its share to public. By offering its share to public. Now the person who is share person who buy the share of limited company is called partner. We can buy share of any listed company. We are maybe we go to the exchange and we can buy the share of any listed company that are listed in on the exchange. Okay, the person who buy the share of limited company is called partner in that particular business. The liability of partner is limited or unlimited. Here is the limited liability of the partner up to the capital invested in the business. The main advantage of public company is that the liability of a partner is limited up to the capital invested in that particular business. Okay. So compared with both sole trader and partnership, limited companies are quite different in the type of business entity. The main difference are summarized. Here is the difference between the limited companies. In limited company, at least one shareholder, but with no maximum number. There is no the upper limit of in limited company. All shareholders have limited liability up to the capital invested. Third one is limited company pay corporation. Corporation tax means company tax. Limited company has to pay company tax on their profit, whereas sole trader and partner are likely to pay income tax rather than company tax, because the sole trader and partnership is not company, so they have to pay income tax on their income. But the company is a company, so company has to pay a company tax, which is slightly higher than the company tax is slightly higher than the income tax. Shareholder delegates the running of the company to the director. Shareholder is not directly participating in the business, so shareholder hire the director as an employee, and director and manager are responsible to run a business. Director are elected by shareholder to run the company. Who is elected by the director? Shareholder. Shareholder elected the director in its AGM. AGM stands for annual general meeting. In AGM, shareholder appoint the director. That who will be director? The director will be the from shareholder. From shareholder, anyone will be a director, or director will be outsourced, or director will be a stranger person rather than shareholder. Now there is a difference between private limited companies and public limited companies. This is the last discussion of the day. Private limited company. The word LTD or limited appear after the company name. For example, ABC Ltd. It means it's a private limited company. Minimum of one shareholder to the limit of share capital and at least one director. In private limited, there should be a one shareholder and at least one director exist in the private limited company. Share trading restricted. We can't sell share to public. No stock marketing listing. It's mean the share of private limited is not listed on the exchange, so they can't generate more capital from the general public. They can generate finance internally. What's the public limited company? The word PLC or public limited company appear after company way. For example, ABC limited company. ABC public limited company. Public limited company. It's mean it's a company, it's a public company whose share are listed on the exchange. Minimum of two shareholder. You have to remember this. In private limited, minimum number of shareholder is one, but in public company, minimum two shareholder to the limit of share capital and at least two director. They should be minimum two shareholder or at least two director always exists in the public company. And in private limited company, only one shareholder and one director is required. No restriction to share trading. Usually listed on recognized stock market. It's mean the share of public limited company listed on stocks market, listed on exchange. Listed on exchange. Exchange means stock exchange. Exchange means stock exchange. No restriction on share trading means list public company can sell its share to public. Got it? Any question at this stage? Any question?
No, sir.
Okay. I read this paragraph. We already discussed in our discussion that private limited company do not sell their share to general public and so forth. The last thing is the advantage of limited liability status and the ability to raise large amount of finance are offset by certain legal obligation. Number one, the advantage of limited liability status. Although the company has limited liability status, but there are other obligations as for other than the limited liability. What's the other obligation a limited company has? Number one, annual financial statement must be usually audited by professional qualified person. A person be a chartered accountant is audited compulsory. It is compulsory for public limited company to be audited by some professional person. But in partnership and sole trader, it is not required to be audited. Second one is annual return must be completed and filed with the registrar of companies. These return may be inspected by general public. The financial statement included as part of annual return lack much of the detail that could be used by competitor. Number one is it is compulsory for the public company to audit its financial statement. Second, annual return must be completed and published and filed to the registrar of the company. Third one is companies are usually regulated by government legislation and or agencies. Public companies are usually regulated under the government legislation. It means company can't do any activity which is against public legislation. Copies of the company's annual audit financial statement must be sent to each shareholder and debenture holder. Here is the 4 legal requirement which abide by the limited company. Here is the you can say that this disadvantage of the limited company. Although the limited company has advantages that its liability is limited, but they have any other obligation that public company has to follow. Got it? Any question at this stage you can ask?
No.
You both of you. Now we have to stop here. You can read the entire topic from chapter number 1.12 at this point. If you have any question, you can ask in my WhatsApp group or you can ask in another session. Okay? If you have no more question, now let's end up the topic. End the class. Okay?
Okay, sir.
Okay. Can we end the class?
Yes, sir, sure.
Okay. Thank you so much for
Okay, thank you.
joining.